Attention, please. The show starts in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, go.
Well, here we are again, and welcome to another edition of Common Ground with me, John THEILLON. Once again, I'm your host, as you know, and if you don't, you ought to. I'm the coach of communication, the captain of collaboration, and of common ground. And that's what we're all going after, is to achieve some common ground, you know, the good stuff. I'm also the mayor of Reeltown, I have to tell you. And if you're not familiar with that even still, all that means that I'm working always to keep things right down the line as much as possible. No sugarcoating, okay? Once in a while, maybe just a small pinch from afar, but really no sugarcoating. And I like to be as real can get, as real can be. Some folks, you know what? They don't get it. They don't like it. They don't want it, and that's fine. While others, you know, they want to live in Reeltown. They do. And again, I'm the mayor of Reeltown. So welcome. It's an open invitation if you get it. As always, we're coming to you today from the studios of Hamilton Media's Hamilton Radio right here in, you guessed it, Hamilton Township, New Jersey, just moments from the capital of Trenton here in New Jersey, right where I-195 and U.S. Route 206 converge. Hamilton Radio, in case you didn't know it, and even if you did, it's always good to reiterate, Hamilton Radio is an iHeart music station. It's an iHeart station. It's the flagship station, too, for Common Ground with John THEILLON. Thank you so much. And for the Exceptional Radio Broadcast Network, the ERBN. But I have to tell you, along with programs like this, for the best in music, from outstanding independent artists and groups to all the great stuff, all the great sounds that we know and has made up the soundtracks of our lives, I have to say, Hamilton Radio is where all the cool kids go, and for the folks who just need that music fix, that's where we go. You know what I mean? It's Hamilton Media's Hamilton Radio. Check it out. It's very easy to do. Go to hamiltonradio.net, Hamilton Radio, all one word, .net. You can go to iHeartRadio.com, too, and search Hamilton Radio Oldies. That's what they call us. Or, again, just go to hamiltonradio.net. It's our new, bigger, better, brighter, sparklier, whiter, you know, website. It's really, really quite something. However you tune in, turn on, crank up. Again, I have to say, it's some of the best in music and entertainment that you've stumbled across, all on one great platform. Again, hamiltonradio.net. All right, so today I want to discuss a couple few things. Matter of fact, maybe it might be a couple few more than a couple few. But I want to discuss stuff that's basically, it's about where the rubber meets the road for folks like you and me, Mr. and Mrs. America. One such thing that's been kicking around again here lately, we had a discussion last week, as a matter of fact, Gino and I. It's tax reform. Of all things. Yeah, we're going this direction today. Oh, yeah, we really are. It's on the agenda. There's a vote promised on it this year on a national sales tax. Yeah, okay, I get it. The groaning, oh, geez, here we go. But you know what? I have to say, I'm not going to, drone on, like some dopey politician on an agenda. I'm just going to lay out some information. This is what I do. This is part of the Reeltown way. I provide you with information, and then you do with it what you will. This now is that, based upon this whole tax topic. As you might expect or even suspect, the principles that people like me and many others have believed in for a long bunch of years and continue to believe right now are the principles that I'm still supporting right now, right here in 2023. And with that said, not for nothing, but I've got an even greater dislike, a greater disdain, whatever you want to call it, for the IRS and our hideous tax system. Now more than ever, because it's just, it's ridiculous. Have you ever heard about it? I mean, it's just horrible. Politicians, boy, that's turned into such a greasy word through the years. Yeah, for a while I thought maybe politics would be a good career move. Nope, thank you, no. But politicians have really combined the worst of two worlds. Yeah, giving us a tax code that's simultaneously filled with, number one, class warfare provisions that punish success, while also, number two, containing thousands of special breaks that benefit the well-heeled, opportunistic friends of politicians. Oh yeah, if you know Senator Muckenfudge or, Congressman so-and-so, guess what? You're in, if you play your cards right, though, but you're in. You know, it'd be a great idea to toss the current tax code right in the trash, replace it with something that collects revenue in a less damaging and in a less corrupt manner. Don't you think? I mean, that's just logic 101. For what it's worth, I lean more toward what's typically called a flat tax over a national sales tax. Some have said they're kind of the same thing, some have said they're not, but not because one is theoretically better than another, but because of two reasons. And I got to tell you, it gives me no comfort when I think about giving untrusty politicos a new source of tax revenue without unambiguously and permanently getting rid of the income tax as it is right now, because it kind of stinks, it kind of sucks. Another concern is that a fair tax is vulnerable to politicians following up and conjuring up and banging the drum with false emotions and actions, even considering such a thing. This is largely, to me anyway, it's largely due to lawmakers who would get hit with election year ads saying that, well, they want a big giant 30% tax on everything people buy. Well, no. Not necessarily. That's not really it. But at the same time, overlooking that our paychecks will also be higher, bigger, stuffed with more money, so to speak, once these income tax and payroll taxes are 86th, There's a lot of sympathizers that openly admit that a fair tax has vulnerabilities. Here, you've heard me say this before on several occasions, there's no perfection with this life, in this life, of this life, or anything dealing with it. There's not. Okay? And this whole tax business, again, there's never going to be perfection, but you know what? If we go toward perfection, we're going to get it good. What's also a concern is political blowback against fair taxes. Tell you what, like him, loathe him, think he's a nut or whatever. I hope that Kevin McCarthy keeps his promise as Speaker of the House and that there is a vote on the floor on this. Not because I'm wearing, rose-colored glasses or because I'm Pollyanna-ish about something good getting through the Senate or to survive a Biden veto, but because if tax reform becomes an actual issue, a notable issue, or at least a big significant talking point this year, that's likely to set the stage for bigger, more impactful, meaningful debates on this in 2024, and maybe, just maybe, we could end up with something decent sooner rather than later. I'm just saying. Again, glass half full, people, glass half full, okay? Oh, and by the way, let's go Mets. Sorry, just saying. So there you go. Here's the thing. There's a widespread consensus out there that the current tax system is a complicated failure that puts a squeeze on the nation's growth while allowing the political, well-connected people to manipulate the system to get special breaks that are not available to the average guy, average Joe, average Josephine, average workers and average businesses. They're just not privy to it. This is stimulating a great deal of interest in shifting to a simpler flat tax, fair tax, whatever you want to call it, okay? To me, and this is nothing new coming out of my mouth here, I got to tell you folks, in an effort for the people to get more toward, some common ground, individually and collectively, collaboratively, the United States should move quickly, in my opinion, to reform the tax system in one way, shape, manner, or form or another. In a competitive global economy, jobs and capital flow to jurisdictions with better tax laws. It's just that simple. If the tax laws are better and easier, there's going to be more coming that way. Okay? Traditionally, this process of tax competition has benefited the United States. It really has through the years. But now there's growing evidence that America is falling behind. Here we go again with that. Nations around the world have been lowering tax rates and reforming their tax systems. There's at least 9 countries that I'm aware of, could be more by now, 9 of them that were part of the former USSR. They've adopted versions of a flat tax, okay? Yeah, I know, they're just all those nutty, quote unquote, all former communist places. Well, it's whatever. These are pro-growth reforms that they were needed. These people needed growth. And what's happening, they're getting impressive results, and they could really be a helpful roadmap of sorts for policymakers here in the United States to follow, if not utilize. First, what is a flat tax? Well, okay. Unlike the current system, a flat tax is a simple, fair, and pretty good for growth. Instead of 893 forms required by the current system, a flat tax would use only 2, count them, 2 postcard-sized forms, one for labor income and the other for business and capital income. See how easy? I'm a big fan of ease and simplicity, in case you didn't know. I really am. It's one of my mantras. Unlike the current system, which discriminates, I should say, based upon the source, use, and level of income, a flat tax will treat every taxpayer alike, fulfilling equal justice under law. That's the principle etched above the main entrance of the United States Supreme Court building, by the way, just putting that out there. And unlike the current system, which punishes people, it's punitive damages. Yeah, it's punitive damages. Well, yes, it is. It punishes people for contributing to the nation's wealth. A flat tax would lower marginal tax rates and eliminate tax bias against savings and investments. Huh? So, wait a minute, we're going to be encouraged to save? We're going to be thumbs up to invest? Wow, go figure. This is a positive setup that's designed to lead to better economic performance in a competitive global economy. There have been several flat tax proposals over the years. All of them have been based upon a proposal developed by 2 Hoover Institution economists, okay? A little research there, but yeah, look it up. While no 2 plans are alike, they all share common features that fix many, if not all, of the major flaws of the current IRS codes. Simplicity and fairness are also natural consequences of these components and of flat tax reform, or tax reform in general for that matter. Here are several major features that it's good to know about. A single flat rate, number 1, okay? All flat tax proposals have a single rate, usually less than 20%. Huh. Last I checked, paycheck-wise, I was anywhere between 25 and 30% of my gross pay being taken out to make my net pay. Now, granted, of course, there was health care, 401k, life insurance, and the whole thing, okay? But still, it's a lot. It's a lot, okay? Seeing as, again, it's a lot, all right? 20% or less than 20%, like they're saying here, that would be better now, wouldn't it? Yeah. A low flat rate solves the problem of high marginal tax rates by reducing penalties against positive productive behavior, such as, I don't know, work, risk-taking, entrepreneurship, that kind of thing. Another point is this: there's an elimination of special preferences as well. Flat tax proposals, get this, they would eliminate provisions of the tax, let me just read this to you correctly here. It would eliminate provisions of the tax code that hand out preferential tax treatment on certain behaviors and activity. Getting rid of deductions, credits, exemptions, and other loopholes also helps solve the problem of complexity, allowing taxpayers to file their tax returns on a postcard-sized form. Seriously, size of a postcard. Not a big giant postcard, a postcard, like you get down to the shore when you're on vacation, Another point, no double taxation of savings and investment. Flat tax proposals would eliminate the tax's code bias against capital formation by ending double taxation of income that is saved or invested. This means, you ready? No death tax, no capital gains tax, no double taxation of savings, no double taxation on dividends. By taxing income only one time, because I don't know about you, I don't go to work twice. I don't. Whether it's I have one job or 6 jobs, I don't go to work twice at a given job. I just don't. So by taxing income rather, one time, a flat tax is easier to enforce and more conducive to job creation and capital formation. Go figure that one. Here's another point called territorial taxation. Flat tax proposals are based on common sense notions of territorial taxation, meaning that governments should tax only income that is earned inside national borders. Whoa, wow, dig that. By getting rid of worldwide taxation, a flat tax enables U.S. taxpayers and companies to compete on a level playing field around the world. Whoa. Boom, mind blown. It's also family friendly. Go figure. Just like us here at the Hamilton Radio, it's family friendly. All flat tax proposals have one loophole. Households receive a generous exemption based upon family size. For instance, a family of 4 would not begin to pay tax until its annual income reached more than $30,000. Oh, okay. It's also consumption-based, this flat tax. A tax code that does not discriminate against savings and investment is considered a consumption-based tax. Did you know that? I didn't. Now I do. It's a regardless of whether taxes are deducted from the paycheck or collected at the cash register with a purchase. In this respect, a flat tax is a type of consumption tax. The difference between that and a national sales tax is where the tax is collected. A flat tax is levied on income, but only once and at one lower rate, okay, as it's earned, okay, by the person who goes to work. A sales tax, however, is levied on income, but only once and at a low rate as the money is spent. So you go to the store and you buy stuff. You go to the car dealer and you buy a car. You go to the place and you buy things. That's how that works. Both the flat tax and the sales tax differ dramatically. Did you know this from the U.S. Internal Revenue Code? Yeah. The current tax code has numerous forms of double taxation, such as its treatment of savings and corporate income. The current tax code also has several forms of wealth taxation or asset taxation, such as capital gains tax and, again, the death tax. Really? They get you coming and going, man. No kidding. These are also forms of double taxation since the assets were acquired with after-tax dollars. That knocks me out, man. The current tax code even has provisions that force taxpayers to overstate their income. Where have we heard stuff like that before? I'll just leave that there, okay? It forces people to overstate their income, such as forcing businesses to depreciate the cost of a new investment instead of allowing immediate and full deduction, which is a policy known as expensing, when they have costs incurred. None of these forms of double taxation, wealth taxation, or overtaxation exist in either a flat tax or in a national sales tax, by the way, which is why public finance economists categorize both systems as consumption-based taxes. How a flat tax would work for the individual taxpayer. Okay, here we go. This is interesting, and I hope this is helpful. I really do, because this is things that people are kind of glancing off of and not really digging into. Compared to a current system, the flat tax is very simple, extremely simple. Households pay tax on their labor income using a 10-line individual postcard. They don't need to worry about reporting dividends, interests, and other forms of business or capital income. Just do not. These forms of the income tax are at the business level. So this eliminates any need to tax people at an individual level, since that would violate the principle of no double taxation. Ha-ha. me tell you, this individual postcard submission is so simple that like an 8, 9, or 10-year-old could do it, all right? And in about 5 minutes as well. Pardon me. Each household would report wage, salary, and pension income on line 1, which should easily be available when you get your W-2. Using lines 2 through 5, the household would then calculate its personal allowance, which is based upon family size. The personal allowance is on line 5. It's then subtracted from line 1 to determine taxable income. This amount is reported on line 6. I know, it's a lot of lines, but it's only 10. The amount of tax is collected then on line 7. The amount is compared to the amount of tax withheld on line 8, which then either leaves a payment, which you put in on line 9, or a refund, which would be on line 10. That's for individuals. For businesses, like the individual postcard form, the business postcard form, also very simple. All businesses from Amazon or Tesla to the local hot dog stand or donut hut would play by the same rules. There's no longer going to be separate tax rules for partnerships, sole proprietorships, limited liability corporations, S-corps, regular corporations, all of that. None of it. Throw it away. No good. No bueno. Get rid of it. Not necessary, okay? All business operations within the USA, whether owned by a U.S. company or owned by a foreign company, would pay tax on the income that they earn in the United States. Makes sense to me, man. Sample flat tax forms would be something to the effect of all business taxpayers would, again, put their total receipts on line 1. They'd add together their labor costs, input costs, their investment costs on line 2 and line 3. These costs are subtracted from the gross receipts to determine taxable income on line 4. Line 5 is the amount of tax due. Lines 6 through 10 exist in case a company either had losses from a previous year, or 2 or 3 or however many, and now have an opportunity to offset taxable income, or has losses this year and needs to carry them forward to the next tax year. It's, again, even for my non-math, they said there'd be no math kind of brain, this really makes it very simple. I have to really think. This is why I looked this up and I started researching. I'm like, man, this may have some teeth. It's just a matter of change. And we know how people from the Senate to the Congress to the House of Representatives, rather, all the way on down, we know how people are reluctant to change, even when it's not a bad thing. Advantages, there are advantages, and I'm sure there are detriments too. Again, there's no perfection, but there are two principal arguments for a flat tax. It's growth and fairness, not necessarily in that order. Many people who are economists are attracted to this idea because the current tax system, with its high rates and discriminatory taxation of saving and investment, it reduces growth. It kills, destroys jobs. It lowers incomes. It does, or at least it can. Okay? A flat tax would not eliminate the damaging impact of taxes altogether, but by dramatically lowering rates and ending the tax code bias against savings and investments, it'd boost the economy's performance overall compared with the present tax codes in place. Again, my dad used to do taxes. Even when he was working at the bank, he would do taxes for friends and relatives when they would ask. And then as he retired from banking, he did taxes every year from late January to the middle of April. And he'd get that big, thick book, I don't know, 2-3 inches tall with the new tax rules. And he dug it. It made my eyes bleed almost. But to hear this, to research and find this information, it just boils it all down, makes it real simple. Again, to me, and simple and ease, whether it's just for me or for all of us in the common ground realm. Why would we not want to at least have a look, peel it apart, and seriously consider this easier, simpler methodology, whether it's for taxes or whether it's for something else? This is why I bring it up, because too often we hear about such things in sound bites. and you only hear what they want you to hear. You don't hear all the details for more than 30 seconds. This is why I'm giving you details, kids. To me, again, the most persuasive feature of a flat tax for many Americans, once again, boils down to fairness. The complicated documents, instruction manuals, and numerous forms that taxpayers struggle with and can't decipher from year to year to year, they would be replaced by a brief set of instructions, and again, 2 simple postcards. Postcards. Again, you've been down the shore, you've been to the mountains, you've been to Disney or Great Adventure, or, fill in the town. Greetings from Berwick, Pennsylvania. Postcard. Postcard. Okay? Again, my dad would get that book that was this thick every year. You got to be kidding me. This radical reform, people sometimes call it, it appeals to citizens who not only who not only resent the time and expense consumed by filling out their own tax forms, but also suspect that the existing maze of credits, deductions, and exemptions gives a special advantage to those who've got political power and can afford expert tax advisors, and that is not wrong. It may not be a blanket statement, but man, as they say, it ain't wrong. It's not. Whenever this is enacted, a flat tax would yield major benefits to our country. I really think so. Faster economic growth. A flat tax would spur increased work, savings, and investment. This would be by increasing incentives to engage in productive economic behavior. It would also boost the economy's long-term growth rate, not just here and now, which is important, but long-term. I had a buddy of mine in college whose dad was famous for saying, son, you got to think long-term. Well, this can help with that. Even if a flat tax boosted long-term growth by only 0.5%, the income of an average family of 4 after 10 years, with that in mind, would be as much as $5,000 higher than it would be under the current tax laws. Listen, 10 years from now, who knows what $5,000 is going to buy? But here's my philosophy. $5,000 is $5,000. $5 is $5. Count me in. Seriously. Another component, another advantage, instant wealth creation, so to speak. According to Harvard economist Dale Jorgensen, tax reform would boost national wealth by nearly $5 trillion. Trillion with a T, by the way, with a T-R-illion, okay? It would do this in part because all income-producing assets would rise in value, since the flat tax would increase the after-tax stream of income that they generate. Whoa! It just keeps going and going and going. It's again, it's the Fabergé, organic shampoo, and they told 2 friends, and so on and so on and so on. It's simple. Once again, we go back to simplicity. Ease and simplicity is another feature of this. Complexity is a hidden tax amounting to more than $100 billion. And you're like, what? Complexity costs $100 billion. What I mean, it's the cost of tax preparation, lawyers, accountants, and any other resources used to comply with the IRS codes. The IRS themselves even admits that the current tax code requires taxpayers to devote about 6.6 billion collective hours each and every year to doing tax returns. Really? That's nuts. Yet, even this commitment of time is no guarantee of accuracy. The code itself, right now, the tax code is so complex that even tax experts and the IRS often make mistakes. 3 words, they often make mistakes. All taxpayers from GM to a hamburger flipping senior in high school would be able to fill out their tax return once again on what? A postcard-sized form. And compliance costs would drop by tens and tens and tens of billions, with a B, billions of dollars. Another aspect, fairness. How many times have we heard from when we were on the playground in elementary school on up to watching an NFL football game. Well, that wasn't fair. That's not fair. Hey, that wasn't a fair thing to do. Well, guess what? A flat tax would treat people equally, period. I don't care if you're Johnny Gotrocks or, living in a van down by the river. You treat it equally. A wealthy taxpayer with 1,000 times the taxable income of another taxpayer would pay 1,000 times more in taxes than the other guy that he makes 1,000 times more than. Okay? No longer would the tax code penalize success and discriminate against citizens on the basis of income. Tax burdens would no longer depend upon the number of lawyers, lobbyists, and accountants on a payroll. It would not. Here's another one. Here's a word that I can't stand: micromanaging, or any form of it. It would be an end, pretty much, an end to micromanaging and political favoritism. Yes, please. Flat tax gets rid of deductions, loopholes, credits, and exemptions. Period. Across the board, all of them. Politicians would lose all abilities. Now, see, this is where it's going to get hung up, because politicians would lose all abilities to pick the winners and the losers, reward friends and punish their enemies, and use the tax code to impose their values and their will upon the economy. Not only does this end a major source of political corruption, again, this is what's going to make it different or difficult, pardon me a moment, but it's also pro-growth, since companies would no longer squander resources having to lobby the politicians or make stupid, foolish investments just to obtain favorable tax treatment. Out the window. Here's another aspect: increased civil liberties. Well, what do you mean by that? Well, under the current law, people charged with murder, for example, are presumed innocent until proven guilty, and thus have more rights than taxpayers dealing with the IRS. Not the first time you've heard that, I'll bet. By contrast, a flat tax would eliminate all sources of conflict between taxpayers and the government. Go figure. More than that, infringements on freedom and privacy would fall dramatically, since the government would no longer need to know the intimate details of each taxpayer's financial assets. Thank you. Please and thank you. Back to global competitiveness. In a pretty remarkable development, former communist nations are leading a global tax, or at least they have been, pardon me, they had been leading a global tax reform revolution. I didn't know this. This is very interesting to me. Again, being a guy of history, Estonia, over in the former USSR, Estonia was the first to adopt the flat tax. They put in a 26% rate back in '94, just a few years after the Soviet Union collapsed. The other two Baltic republics of the former Soviet Union, they enacted flat taxes a few years later. Latvia chose 25%. Lithuania did 33%. A little high, but you know what? I bet you it was a hell of a lot better than what they had in place. Along with other free market reforms, the flat tax significantly improved economic growth over there, and the Baltic Tigers, as they were called, became role models for the region. I can remember seeing, all growing up through the 70s and 80s into the 90s, about just how dirt-ass poor those countries were over there in the Baltic region, in the USSR, all these little states, these little offshoots, these little inclusions of the USSR. All of a sudden, they were starting to get it. So, learning from its neighbors, Russia itself, Mother Russia, they stunned the world by putting in a 13% flat tax back in 2001. Yeah, it's, we're looking at 22 years ago, but still, it's fairly recent history in the big scheme of things. And here's, again, thinking of seeing footage from Russia. I'm not talking about the Kremlin or, any of the haves over there. Russia was dirt-ass poor, just, man, people were struggling. But this flat tax over there, only 13%, it quickly yielded a lot of positive results. The economy prospered. The revenues poured into the government coffers since tax evasion and avoidance became much less profitable. No need to evade because it's small now, can afford to do this thing. So they did. Flat tax went to Serbia a few years later, 14%. Slovakia hopped on the bandwagon a couple of years or year or two after that with 19%. The Ukraine, back in the news even back then, but they chose 13% back in 2005. Romania did it with 16%. Georgia, and I don't mean down south, I mean the country over, Russia area, 12%. And that had, at least for however long, they had the honor of being the lowest flat tax rate in the world, flat or otherwise, I should say. This whole revolution has been so successful that Estonia, they lowered the rate to keep up with the other nations. The last I knew, and it could have even changed since then, they took it down to 24%, from 24%, and then to 20% a few years after that, probably 15 years ago now, I guess. Lithuania took its 33%er and throttled it back to 24%, a little bit more reasonable. So they dropped it 9% too. Yeah, Poland, no Polish jokes here, kids. Back about 15, 16 years ago, they implemented an 18% flat tax. And then with all of that banging around, lawmakers and leaders in Croatia and Bulgaria and Hungary at that point, they were also thinking about it too. Last but not least, the opposition parties in the Czech Republic, they were due to put a 15%er in. Now, I don't know if that has played out over the years or not, but here's the thing, it's front and center. That's the whole thing. They were talking about it. There were meaningful discussions. There was meaningful actions. There was actionable movement because it works, folks. In a global economy, it's increasingly easy for jobs and capital to escape high-tax nations and migrate to low-tax nations. I want to do business over there. Ooh, 38% tax. Well, what have they got? Oh, 21. Well then, that would be less, wouldn't it? We're going to go over there, okay? This means that the reward for good tax policy is greater than ever before. But it also means that the penalties for bad policy are greater than ever before as well. So this, I got to think, is why so many countries, so many nations have lowered tax rates and continue to reform their tax systems. A flat tax will make America a magnet. You talk about, never mind you liked him, didn't like him for whatever reason. What Donaldus Maximus did, Donald Trump for those of you from Grover, Pennsylvania, what Donaldus Maximus did with bringing business back to the United States 4, 5, 6 years ago is going to be like amateur hour compared to having a tax system like this put into place. And that was really good, what Trump did. There are questions that come up. There really are, should the rich pay more? Well, under a flat tax, the rich do pay more than the poor. A wealthy taxpayer, once again, with 100 times more taxable income than his neighbor, they're going to pay 100 times more than taxes. It's basic math. It's basic math. It's fourth grade multiplication. However, a flat tax does not impose special penalties on those who contribute the most to the nation's prosperity by subjecting them to being punished and having discriminatory tax rates. For those who think the rich should pay a higher percentage of their income, the generous family allowance effectively creates a modest level of progressivity with that in mind. For instance, a family with an annual income of $20,000 faces a tax rate of 0. Yeah. A family with, that's not a lot, 20 grand a year, oof, that's darn near poverty. So they face a tax rate of 0. Wealthy taxpayers also benefit from the family allowance, but whether the effective tax rate on an income of $1 million will be a tiny fraction below the statutory tax rate. Now, I'm thinking that this approach is a lot more fair than the current system, which penalizes investors, entrepreneurs, and others who are creating wealth for the economy here in the country, here in the good old US of A. Yeah. Well, it simultaneously provides a myriad of deductions, credits, and exemptions and other preferences that are much more likely to be exploited by upper income taxpayers. They're going to be taken advantage of, people. The flat tax eliminates these special interest loopholes, ensuring that the rich pay the same rates and play by the same rules as everybody else. Here's another question. Would a flat tax reduce the budget deficit? Well, it depends upon the rate, the tax rate, what happens to spending, and how much faster the economy would grow under a flat tax. I mean, there's things to consider. Even after taking supply side effects into consideration, lower rates translate into less revenue at some point. The size of the family allowance also plays a key role, since the decision to protect a certain amount of income generally means that the rate on income above that level maybe has to be higher. Well, the question is, what would happen to charitable contributions and housing markets? Well, some people worry that the transition from the current system to that new system would create problems for charities and for homeowners. History suggests no, not true, misguided. During the 80s, the top tax rate, if you remember, was reduced dramatically from 70% in 1980 to 28% in 1988. This also reduced the value of itemized deductions by the same amount. But the value of housing didn't drop. It did not drop. Believe me when I tell you, it didn't drop. Similarly, charitable contributions actually rose sharply during the 1980s. Now, this doesn't mean that itemized deductions have no importance. That's not the meaning, okay? It simply indicates that the benefits that are generated by a robust economy more than offset any costs associated with lost deductions. So, it's a push and then some upwardly. Now, the question, is there a risk that politicians will raise taxes in the future? Okay. I looked this one up. A partial tax reform in 1986 by tax rate increases followed by tax rate increases in 1990 and 1993, 4 and 7 years later, would indicate that this could happen. Okay, there's no guarantee that they're not going to raise rates. However, it's not an argument against a flat tax. It's further evidence of the need for a constitutional amendment that would require a supermajority to raise taxes. Ha, there's that. The question's been brought up too, should the income tax simply be abolished and replaced by a sales tax? Again, as noted, the sales tax and the flat tax are different sides of the same coin, okay? Some folks have suggested that the better approach would be to replace the income tax with a national tax on consumption. However, it might be attractive in theory. The real thing, I don't know about it, is that Americans could end up not with a sales tax in place of an income tax, but with a sales tax and an income tax. Sales tax will be considered only after the 16th Amendment, which allowed the income tax, is repealed. Otherwise, such an effort could play into the hands of those who want to impose a national sales tax or a value-added tax so that politicians have more money to spend. People wondered also, is it going to eliminate the marriage penalty of flat tax? Two types of marriage penalties. Well, actually three, but I digress. And the flat tax eliminates both of the types of marriage penalties. There is only one tax rate, so it would no longer be possible for the spouse's income to push a couple into a higher tax bracket. Furthermore, since the family-based allowance under a flat tax is twice as high for a married couple as it is for those filing singly, that part of the marriage penalty, so to speak, also goes away. People want to know, too, what counts as taxable income under a flat tax? What about fringe benefits? What about capital gains? Well, one of the key principles of a flat tax is that all income is taxed, but only once. Because again, there are instances where there is a twice taxed situation going on with whatever forms of income. Remember, we hit on that a little while ago. As a result, all the provisions in the current tax code result in double taxation. They're abolished. No more double taxation. That's abolished. The capital gains tax certainly falls in this category, as with the double tax on dividends and the death tax once again. By contrast, income in the form of fringe benefits is not taxed at all under the current system. This policy not only allows upper income people to receive large amounts of tax-free income in the form of health insurance benefits, but it also undermines much needed market forces in the field of healthcare. That might be something we touch on in another episode, this whole healthcare nonsense, but I digress. The flat tax gets all over the inequity by taxing all forms of employee compensation equally. Here's that word again, equally / fairly / alike. More specifically, employers would withhold tax on this type of income and remit it to the government on behalf of employees. What about payroll taxes? The flat tax doesn't address payroll taxes. Both Social Security and Medicare face significant long-term structural problems. We know that they teeter and have been teetering on whatever fence for quite a while now. But these problems, along with the taxes that help finance those programs, are presumably addressed most effectively as part of this entitlement and this program reform. Let's put a bow on this for now. The current income tax system punishes the economy, imposes heavy compliance costs on taxpayers, rewards special interests, and makes America less competitive. A flat tax, while not perfect, would dramatically reduce these ill effects. Maybe even more importantly, it would reduce the federal government's power on all of our lives, us, the taxpayers, and get the government out of the business of trying to micromanage the damned economy. Get out of here with that. Listen, tax is, not taxes, but tax is a 3-letter, 4-letter word, so to speak. There really is never going to be a tax that's good, so to say, for the economy, but the flat tax moves the system a whole lot closer in that direction where it should be, which is raising the revenues that the government demands, but in the least destructive and least intrusive ways possible. Again, one more time for those of you in the back, there is no perfection. It doesn't exist in this life. But by going after perfection, chasing it relentlessly as much as can be, what we're going to get is increased abundance of excellence. That's the concept here, kids. That's exactly the ticket. And it's highly worthwhile as we all continue to go forwards to our common ground. Trust me here. Take it to the bank. Do not doubt me. And as always, by these things I stand. Well, kids, that's it. That's it. That's all of it. Semi-light workout today. Once again, give the rest of the week your best shot. Have a fantastic weekend, too, everybody. I myself, I'm going to slide on out of here, for now anyway, until next time. And thank you for your time this time. Until next time. Thanks. God bless you. This is Common Ground with John THEILLON. That's me. So long.
Ladies and gentlemen, may I have your attention, please? The show starts in 10, 9, 8, 7, 6,